We've been told for a decade that our money lives in the cloud. It's a clean, ethereal image, right? But here's the deal. Your life savings, your retirement fund, the very coffee you bought this morning, it doesn't live in the sky, it lives in the mud. Specifically, it lives on the dark, silent floor of the Atlantic and Pacific Oceans. We're talking about 574 active subsea cables. These aren't massive pipelines. On average, they're about 2 inches wide, the size of a garden hose. Yet they carry 99.4% of all intercontinental data traffic. Every single day, $10 trillion, that's trillion with a T, flows through these glass threads. Let that sink in. $10 trillion, that's roughly 93% of global GDP passing through a handful of 2-inch tubes. Here's where it gets strange. If you cut those threads, the global economy doesn't just slow down, it vanishes. It's the ultimate physical hostage situation for a digital age. And honestly, this is the part that blew me away when I first saw the data. We've built a multi-trillion-dollar skyscraper on a foundation of glass at the bottom of the sea. So how does a digital economy become a physical target? Welcome to the world of gray zone warfare. It's not about missiles or tanks, it's about unexplained accidents. In the last 3 years, we've seen a 300% increase in unexplained damage to these cables. Take the Red Sea incident in early 2024. A few cables get snagged, and suddenly 25% of the traffic between Asia and Europe is offline. These aren't just technical glitches, they're physical kill switches for financial clearing systems like SWIFT.
When a cable is snipped, you don't just lose Netflix, you lose the ability to verify interbank transfers. Your bank can't talk to the central clearinghouse and liquidity evaporates. And this is the part nobody's talking about. 45 million SWIFT messages are sent every day. If the physical path is compromised, the math of global finance simply stops working. Think about your own daily routine. How often do you rely on a digital tap or a swipe?
Have you noticed more frequent glitches with your banking apps or card payments lately? I'd love to hear your experience in the comments, because these glitches might be more physical than you think. Now, you might think the government is protecting this vital infrastructure. But look at the ownership. Big tech has moved in. Google, Meta, Amazon, they now own about 66% of the world's new subsea capacity. They're building their own private maps like the Bifrost and Echo projects. Why? Because data is the new oil, and they want to own the tankers. But there's a side effect. As physical risks rise, insurance premiums for cable repairs in high-risk zones have skyrocketed by 300%. It's getting expensive just to stay connected. And that's where the lifeboats come in. While we're looking at the ocean floor, companies like Starlink are looking at the sky. They're positioning themselves as the only emergency connectivity option. If the cables go dark, satellite bandwidth becomes the ultimate premium. It's a fascinating pivot. Starlink's enterprise revenue grew 3 times faster than its consumer side after those Red Sea incidents. They're not just selling internet to campers anymore. They're selling survival to banks. We're seeing the rise of a new market, emergency connectivity insurance. Basically, you pay a massive premium to ensure your money can still move through space when the floor of the ocean is under siege. Is this all just paranoid speculation? Well, history says otherwise. Let's go back to 1914. It was called Operation Silver. Within hours of World War starting, a British ship named the CS Telconia cut all 5 of Germany's undersea telegraph cables in the English Channel. In 1914, that was about stopping the news. It isolated Germany from the world, but in 2026, a move like that doesn't just stop the news, it stops the grocery store. It stops the ATM. It stops the entire supply chain instantly. There's a massive debate happening right now among the experts. On one side, groups like Telegeography argue that the mesh redundancy of the network makes it resilient. You cut one cable, the traffic just reroutes, but on the other side, the UK's Ministry of Defence and groups like CSIS warn about single points of failure. There are specific spots, choke points, where dozens of cables converge. If those landing points are hit, redundancy doesn't matter. It's like having 10 lanes on a highway that all lead to a single 1-lane bridge. And the warnings are getting louder. Underwater activity from rival states is now a direct threat to the cables that underpin our entire way of life. It's a high-stakes chess game played in the dark. So let's bring this home. What does this mean for your wallet? We're moving toward T+1 settlement cycles. That's a fancy way of saying banks are trying to settle trades almost instantly. That sounds great for efficiency, but it increases our dependency on real-time cable health. Even a 400 millisecond latency spike, that's less than the blink of an eye, can trigger chaos in high-frequency trading and interbank settlements. We're living in a world of infinite digital speed, but we're anchored to the seabed by glass thread. As we look toward the rest of 2026, the real question isn't whether the technology works, it's whether the physical geography is secure. We have to acknowledge that our digital freedom has a physical price. What's your read on where this is heading? Are you positioned for a world where the cloud might occasionally go offline? Or are you still betting everything on those 2-inch threads? I'd love to hear your take on whether we're ready for a physical decoupling of the global economy. Because at the end of the day, we're only as wealthy as the connections we can keep intact.